In this video, we're going to talk about the primary mistake most investors make and how we can fix it. I founded a firm whose sole purpose is to share with Main Street some of the investing rules that Wall Street has been keeping to itself. Now, we've all seen the market enter hot streaks. When a market becomes overpriced and then stays overpriced, there's a name for that. It's called a bull market. Now, we've all seen bull markets. They appear in individual stocks, in indexes, in commodities, in real estate. Just about every asset that trades can experience a momentum-driven bull market. In fact, it's the very nature of markets to exhibit momentum because it's the very nature of humans to chase returns. Now, unfortunately, it's this pattern of bull markets and bear markets that actually plays into the key mistake most investors make. Let's examine the mistake for a moment and discuss how we can avoid it. As you watch more videos, I'll explain why it is that both value investing and momentum investing deliver returns that are better than index investing. But for right now, I'm going to highlight a mistake that we all make that I call value momentum investing. When a stock or an index is trending higher and higher, it's normal for it to start getting a lot of attention. The people that own it are telling their friends how much money they're making. The talking heads on CNBC are putting up pretty graphs. Let's just say the investment hits our radar. Now, if we don't buy it right away, a common course of action is to wait for a pullback to get invested. The feeling is, and we've all been there, this is a rocket going to the moon and we need to get on. But because the stock has already gone up 100% in the last 3 months, we decide we'll wait to see if we can buy it at a lower price. Now, ironically, the worst thing that can happen to us during this time is the stock actually falls in price. Because if it does and we see it, we buy the stock. And that's when the losses start. What have we just done? We just used a value rationale to buy a momentum investment. Now, don't get me wrong. We didn't use any actual valuation calculations. We didn't construct a discounted cash flow model. We didn't look at any financial statements. We just consider the investment to be a value now because it's 20% cheaper than it was 2 weeks ago. Unfortunately, and this is the reality that we miss as investors, the momentum investors that run Wall Street are now done with the stock due to that 20% price drop that enticed us to buy. The momentum is gone. In fact, those guys probably just sold us the shares that we just bought. So now there are still no value investors buying the stock, and the momentum investors are only selling the stock. So the price goes dramatically lower and we take a major loss as an investor. We can't value momentum invest. If we do, we will lose real money. Now, there are plenty of places on the internet that will teach you how to value invest if you want to learn how to do that. I'm here to tell you that now, thanks to exchange-traded funds or ETFs, momentum investing is more effective than value investing and it's much easier to implement. And I'm here to help you. It's not as hard as you might think. I know for certain that you can do this effectively in your own brokerage account if you just follow a few simple rules. So sign up. I give away all of the rules on my website. You can even sign up to receive free portfolios delivered right to your inbox. Don't miss out on this opportunity. It's extremely important that we implement these ideas before the next market collapse. In my next video, we will talk about that market collapse and discuss how we can be prepared for it.